Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's shift our focus to the housing sector. Knight Frank India has released their affordability index. The report says that interest rate cuts have boosted affordability in the first half of 2025. While Ahmedabad, Pune and Kolkata are the most affordable markets, Mumbai is the least affordable city. To discuss this and more, we now have Gulam Zia, who is the Senior Executive Director at Knight Frank India, who is joining us now. Good afternoon to you, Mr. Zia. Historically, when affordability has improved, what has been the impact on housing sales as well as the inventory levels? If you can just outline that, and is the current scenario any different as compared to what you've seen in the past?
Well, to start with, the inventory levels have been, varying for last, if I talk about last 3 odd years, ever since the market has turned, and the sector has started performing much better for last 2-3 years, and then because of a velocity of sales improving, the new inventories that have been launched are not really keeping pace. So overall, while there was a concern of huge inventory, but whatever said and done, the inventories have been lapped up, have been selling very fast. So the velocity of sales have shot up more than the increase in new supplies that is hitting in. So overall, the environment out there is such that barring 1 or 2 cities, like for example, Bengaluru would be perhaps behaving slightly differently, and so is the case of NCR. But the rest of the markets have been pretty similar, where the inventories have not come as much to go alongside the velocity of sales. So net, what we are looking at is, again, even the fact of price rise also has been too phenomenal, both in Bengaluru and NCR. So these are 2 cities where even affordability is impacted because of that. But at the macro level, the inventory levels are not really keeping pace with the velocity of sales.
Okay, Gulam, thank you so much for joining us. So what you're essentially telling us is that the current pace at which inventory is getting developed, you're saying that it's getting snapped up. So home buyers are actually snapping up homes faster than they can be built. There's another very interesting point that you made in your report, especially when it comes to the affordability level. And you've mentioned that for Mumbai, it has gone above the 50 mark, indicating that homes in Mumbai are quite unaffordable. So especially if you could put the spotlight when it comes to the urban areas, what are the trends that you're witnessing over here? And has there been a significant drop in interest as far as home buying is concerned?
Sure. So 2 aspects here. Let me start with the affordability itself, the way we are tracking. We are doing it for last about 15 odd years. We started tracking it from 2010. And since we're focusing on Mumbai, your focus was, how unaffordable is Mumbai market. Those days, talking about 2010, the index was at 93, 94. And that has come below 50 for the first time as we are marking right now. And that is where affordability is coming in, like in spite of most of us believing that Mumbai is the most unaffordable market, but the index has been changing and it has come down from 93 to 48, which means affordability for Mumbai has actually improved a lot. And for the first time, it has gone below 50 mark on the index. And on the other side, if I talk about other markets, like for example, Delhi, while Delhi still is at 28%, much more affordable than Mumbai, but then that's the only market where affordability has actually worsened. It used to be about 25 or 26 mark till about a couple of months back. It has gone up to 28%. 28 on the index. So if you look at the rest of the cities also, while as you rightly said, 2 or 3 cities are always very, very affordable, like Ahmedabad, Kolkata, and even Hyderabad for that matter, while the prices have shot up a lot in Hyderabad, still the affordability levels are much, much respectable. However, Mumbai is one market which has breached all that. For last 15 odd years, it has been continuously falling in terms of affordability. Well, the reason is simple. Now coming to interest rate that you spoke about in the second part of your question. Interest rates do have a huge impact, because when we talk about this index, affordability is a part of how much do you have in terms of wealth and your ability to raise EMIs every month. So the EMI, the value that you can set aside for EMI has improved a lot with the interest rates coming down. So while we are talking about 100 bips of a cut from the RBI side, while it may not have completely populated down to all home loan seekers, but that 100 bips correction has had a huge impact. And that impact is where, today if I'm talking about Mumbai going down by 2 percentage points, 200 bips, within a matter of about a month and a half or 2, the reason is simple, because a home loan becoming cheaper and affordable, direct impact on the affordability. So overall, this is a scenario. While the NCR is the only market where affordability has actually worsened, the rest of all the markets, affordability is improving.
Well, Gulam, your report also mentions that affordability is at the best levels that we've seen since the pandemic. So, in terms of the supply side, let's talk about that because, of course, demand is doing quite well, like you pointed out. So, from the supply side, is the mix now expected to change because it is actually the lower end of the consumer which benefits from lower interest rates? So, will the mix of launches that comes from developers now lean more towards the mid-income, the affordable segment, because all of these lower-end segments were impacted?
Well, first to start, let me just put the things in perspective. First of all, the upper end of the market that we always talk about is very significantly visible in Mumbai and Delhi a lot, and to a certain extent even in Bangalore. However, the mid to lower end of the market is somewhere impacted because not many developers are catering to that, as we have been noticing. Most of the known and listed players have exited the affordable segment per se, which is the lowermost segment of it. But the mid-end segment has always been thriving and doing well. While super luxury is the only one where most of the press captures, the per square foot rates, etc., are spoken about a lot. But the mid to upper end is the market where most of the developers are present and bringing in lots of inventory in that segment. However, the lower segment, as you're talking about, which is more prone to any impact or dynamics of interest rates, is that sector where none of the listed players or known developers catering to or bringing in any inventory. And that has had a severe impact at the bottom end of the market where affordability matters a lot. You're very right when you say that this is a segment where interest rates really matters. But in that segment, none of the known developers are catering to the requirements, and that is a big issue. There's a big risk that we're facing. Because of Pradhan Mantri Awas Yojana 2.0, which was kicked in in about October 2024. After that, huge interest has generated in the lower end, and with the home loan interest rates coming down, overall a double whammy where the bottom end of the market is actually expected to come in hordes. But for want of any proper inventory, we are feeling that it will have a significant impact with prices shooting up in that segment, and that's a big risk that we're facing right now.
Well, very, very interesting insights there. Gulam, thank you so much for joining us, giving us a view of how affordability is panning out, especially as far as the residential real estate market is concerned. Well, we'll now slip into a short break. But before we do that, some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.